What is up, everybody? Welcome to the next episode of the CRE News Hour. Thank you for tuning in. We come to you live each and every single Wednesday at 3 p.m. Eastern Standard Time. My name is Henry Eisenstein. I'm with my co-host, Rafael Cayazo. How you doing?
Woohoo! Doing great, man. Happy to be live. It's a great day, and it's been busy week. So I know you're going to be hosting people this week. So I know there's a lot of movement in your life as well. So.
That's right. Well, we're finally coming back from Thanksgiving weekend. And again, in this weekly podcast, we come to you live to discuss current events and everything commercial real estate. And today we have a lot of awesome stuff for you. Not only talking about some cool zoning techniques and tips with some different things like California is going to be making some zoning changes, but also going to bring some massive help to commercial real estate agents and developers. Things in regards to office landlords, more about the Sun Belt stopping, but also apartments, apartment construction. We have, commercial real estate prices not bottoming out anytime soon. We got affordable housing topics that we're going to be talking about today. A lot of good stuff. So, Rafael, I don't know where you want to start off, but I'm ready to rock and roll.
Sounds great. Let me go ahead and get this rolling. All right. So the first article that I read recently was East Coast mayors call for more office to apartment conversions. I mean, this is not necessarily new news. This has been something that a lot of cities around the country are having to contend with. The central business districts of a lot of these major markets have been affected, obviously, via COVID. And many office users are deciding to shrink their footprint and kind of go to a hybrid model, which is causing a lot of these, office buildings that historically have been, prime real estate to be drastically affected. And so one of the solution options for some of this vacant property is to convert it into multifamily uses. Obviously, that creates some concerns, particularly when it comes to the actual cost of doing so. So, you see a lot of these East Coast mayors saying, hey, we need to convert these buildings into into apartment buildings. But a lot of the people who are the actual policy makers and, people who are developers kind of say it's somewhat of a gimmick, unless there's a significant amount of investment that's made on the city side, which I know cities like Philadelphia, it kind of references here that they provided over $1 billion in tax breaks for renovation projects that are focused on adaptive reuse, in particular when it comes to developing new apartment renovating apartment buildings. But, even if you look at it since 2000, only 498 buildings have been converted in the United States. So they've only created just under 50,000 units, which again is a drop in the bucket when it comes to, the overall multifamily development. I think, I don't have the numbers in front of me, but, we're talking, 20x or 15 to 20x of what we produce on a yearly basis when it comes to new product and multifamily. So it's really is a drop in the bucket, but, at least they're thinking in the right direction. So I don't know if you've, had any conversations or instances of this being something that you've looked at.
Yeah, I think there's an opportunity for people to get close with political parties, like the town mayor, and people, and when it comes to their local government, and having a conversation with them of like, what do you want? What is your vision for the coming years? While the mayor's quote in power, like what's your vision for the township, right? Like what areas you're looking to have development in, like what are you looking to do with these types of properties? Like, but this is a really interesting opportunity for commercial realtors where, like, if you have the right connections and when it comes to the town, you can really make a lot of difference. Come up with also a lot of opportunities as a broker to make money as an investor.
Absolutely. Yeah. And, obviously transacting these products, when you're dealing with office property, especially larger office property, the marketplace for those is pretty small right now. So if there's ways that you can reposition the assets so that it becomes more attractive for an adaptive reuse project, obviously that becomes another selling play, again, if you deal in the office market. So,
huge opportunity. And it's like looking at really understanding the zoning laws. I think this is a good reminder to like, hey, like if you're not familiar with your specific township's zoning laws, become familiar, because there's a lot of opportunities right underneath your nose that you're not looking at because you don't know your zoning laws. And when you actually understand where certain zones allow you to build certain square footage, it's just like, a certain area where you might be able to build 5 stories, 7 stories, 10 stories, where, hypothetically 3 streets over, 5 streets over, you can only build 2 stories. So it's like, hey, if you're going to be prospecting, you might as well, if you're in the development world as an agent, if you want to look for development opportunities, look where you can build 5, 10, 20 stories, right? Because you're going to have a much larger maximum allowable amount of units, as an example, that can be built.
Absolutely. And on top of that too, most cities have comprehensive plans. So, the leadership of these cities get together and discuss what they want the vision of the city to be. And if you're in a major market like a New York, for example, there may be comprehensive plans for specific boroughs and stuff like that. Read those plans. I mean, they can be super illuminating as to where areas of progress are probably going to go just based on where the city wants them to go. So, next up is going to be an article that Henry pulled out. It's going to be Berkeley, California clears way for taller buildings in bid to boost housing.
Yeah, so similar to what we were just talking about, this is an exact specific response to, which is basically like they're improving zoning where you're allowed to go from, if you read right there, up to 12 stories, which will nearly double the neighborhood's development potential and clear the way upwards of 2,650 units to be constructed in and around the university campus, according to Berkeley Planning Development. So this is going to be an interesting opportunity where, like, hey, like if you're in California and this is a town that you could be prospecting in, like, hey, I don't know if you knew this, but now from, I think, instead of like 4 or 5 stories, now it's to 12, right? And that's a huge difference when it comes to apartment unit development. So really, really interesting opportunity. If you're anywhere near Berkeley, California, if you're prospecting California, this could be a really good opportunity for you to be bringing some deals that some developers are not paying attention to, because this is brand new news. And if you can be the first one to the opportunity, you might be able to make something for it.
Yeah, absolutely. And again, it just kind of goes to show that this is not unique to Berkeley. I'm sure there's going to be a lot of different municipalities around the country that try to follow similar protocol, because again, in densely populated areas, you can't build out. I mean, it's very hard because there's no land available. And if the land's available, it's going to be worth a fortune. So the only way you can actually make the economics of these developments work is if you go vertical. I would imagine that a lot of other municipalities around the country that you have, population centers of this magnitude, there's probably going to be legislation, if not already talked about and being implemented, it will be shortly a point of discussion. So, like Henry said, talk to your local mayors, talk to your local municipality leaders, and try to get some information that could potentially help you out in your business.
Yeah, I mean, like you said, like this is happening all over, and it's happening without you knowing about it, right? I mean, obviously, this is a news article that came out randomly, showcasing Berkeley. However, there's a lot of towns in your hyper local area that are experiencing the exact same thing, and maybe there's just not the news around it. So make sure that you're going through it, because the zoning changes often. It's actually quite surprising how often the zoning changes occur, which is something you got to be paying attention to.
Absolutely, man. Couldn't agree more. So next up is an article off BizNow. It's spurred by deals. Shoppers set pre-pandemic era record over Thanksgiving weekend. So I don't know if you heard this or not, but I think either Sunday or Monday was the most traveled Thanksgiving on record, which is kind of crazy to me. Obviously domestic flights, but I was coming back from Arizona on Monday, and it was super busy still. But I think it was Sunday, which was the highest ever recorded when it came to domestic travel for a Thanksgiving. So it was kind of interesting to see that the people are still moving around and people are still engaging in the economy. But again, this kind of references that more than 200 million U.S. consumers shopped in stores or online over a 5-day period, which is kind of mind-boggling if you think about it. They were able to they were able to generate billions and billions and billions of dollars in revenue for the holiday weekend. Although a lot of people in the media have talked about how the American consumer is slowing down. Obviously, when it comes to spending in the holiday season, we the American consumer just, again, is willing and able to spend what they need to spend in order to make sure that they're able to provide their families with a fun holiday season. And so you can kind of see there some of the statistics regarding the actual shopping for the season. I think as you can see down here, there were some statistics that compared 2022 to 2023. almost $1 trillion in spending, which is unbelievable for the holiday season.
Yeah, I mean, let this be a sign for those of you who are becoming news junkies, media junkies, looking at like, oh, the consumer spending and all that kind of stuff is down. Or we're heading towards this weird, crazy time where like no one has any money and all that kind of stuff. We just spent $1 trillion on basically gifts, right? For the most part, for the holidays, none, not including, actual, necessary goods and services for the most part. Right. So it's absolutely crazy to me. Like when everyone has like these crazy fear, social media posts around like everything falling from the sky, like we're fine. Things are going to be good. Right. Interest rates are, if you look down at the scroll bar down below, you're already seeing interest rates drop a point, some smidge under 7. Right. We're already under 7% interest for commercial loans in a lot of different types of loans. There's even some CMBS loans that are sub 6 right now. Okay. Because if you look at the bond market right now, the 10-year treasury is like 4.8 right now, or 4.5, right? Which is trying to show you like, hey, like it's not as bad as everyone's trying to make it out to be. So do your due diligence. This is proof in the pudding that like people still got money. People are still spending. There's a lot of money out there. Just find some decent opportunities.
Absolutely. And people may comment regarding the 10-year treasury that it's been somewhat steady as far as 4.5 to, let's say, 5%. But the reason why there was such a big spread between the 10-year and what we were essentially seeing in the marketplace for interest rates was because banks didn't know where it was going to go. So, in a situation where they're terrified. So in a situation where you don't know, there's a lot of volatility, you're going to increase your spreads when it comes to loans that you're offering to the marketplace. And so now that we're starting to see some stability, lenders are starting to get more in range with, the delta between, what they're actually offering the marketplace and the 10-year treasury. So, I envision that rates will continue to hold steady and potentially even go down in 24, which I know we talked about. We're going to be talking about a little bit here on the podcast. But in the meantime, guys, for those of you guys who are watching, highly encourage you guys to engage with us. Feel free to type away in the chat box. Leave us a comment. Let us know if you guys have any feedback or thoughts on some of the articles that we're sharing today, and we'll just keep on moving.
Yeah, let us know where you're tuning in from. We always appreciate you guys tuning in. It means the world to us. And again, if you guys have any deals that you guys would like us to underwrite or to showcase, if you have any deals, make sure you set the deals at CREnewshour.com. What else do we got today?
We're pulling it up. So next up is going to be don't count on commercial real estate prices bottoming out anytime soon. I actually saw this article as well. So,
yeah, I thought this was interesting where it basically shows a 2-year lag time, right? If I remember correctly, a 2-year lag time between the least amount of units sold, right, which is the low transactional volume period. Okay. We're just talking about units transacted to the amount of to the average price, right? So there was a 2-year gap on average most of the time between the lowest transactional volume period and the lowest price for a I guess our price per square foot, or that's what they're showcasing here. So anyways, it gives you this is actually some pretty cool stuff. So what that is showing me, or at least what I'm hearing from this, is that the prices for commercial property are roughly going to hold steady and sort of taper down over the next 24 months. Right, because we're seeing all-time lows now in transactional volume. Our prices are pretty steady up here, and we're going to start to see a tail off when it comes to pricing. So, pretty interesting stuff. I guess again, I'm going to look at this as a really positive way and say like, hey, like how can I just be really consistent for the next 2 to 3 years, because pricing should be going in a direction that will be very, very, very favorable for the investment markets.
Yeah, absolutely. And I think it just goes to show that, the idea that you can just wait for these opportunities to come around, there is lag. So, if you decide you're going to wait for 2 or 3 years to jump in the game, or, maybe you say, well, I'm just not doing as well as I want to right now, and it'll eventually change. This is kind of an indicator that showcases that, it doesn't pay to wait around. What it pays to do is you need to continue to establish your market dominance within whatever market or jurisdiction or focus area that you're deciding on. Because, if you're in the commercial real estate brokerage market, you're seeing a lot of agents, not only in commercial real estate, but in residential real estate, starting to leave the market, which is going to leave a big vacuum as far as, the marketplace is concerned when it comes to market share.
100%.
So this is the time to do what you got to do. Go ahead.
Scroll down a little bit real quick.
Yeah.
I just want to show something. So scroll down to the other graphs. So, because I want to point this out. So watch this, right? So if you look at industrial and retail transactional volume, what this is showing is that in the past we had, and this is obviously 2009, so a very, very serious event happened economically, and we saw a bottom out in 09. And then what I see, which is incredibly hopeful, is the amount of transactions skyrockets, right? I mean, you nearly double in the next 2 years. If you see that bottom from what is that, 1,854 to 4,000 transactions on the industrial side, and on the retail side, 3,700 or so to nearly 8,500 in 2 years, guys. 2 years, right? So that means like we're gonna be bouncing right back, and I mean, bouncing right back as in we're got a 2-year period of time here, but this is really hopeful news. And the fact that we're going to have a lot of opportunity with pricing dropping off and transactional volume going back up. I think there's a lot of opportunity in the marketplace over the next 24 years. So I'm incredibly hopeful.
Yeah. I mean, you can even look at this graph, like, pre-2008, as you mentioned, was a much worse financial crisis than what we're going through right now. And exactly. there was almost a, not going to lie, it was a significant drop off, but we made up all that ground within a year and a half, almost 2 years. So, again, I think it just goes to show, like you had mentioned, that, just put in the time right now, generate opportunities, and, long term, it's going to bode well for you and your business. So.
Absolutely. All right. What do we got next? We're talking affordable housing.
We're talking multifamily deals. So, cool. Owners with urgency from loans coming due, helping get deals done. So, the whole purpose of this conversation or the article really was focused on distress that's in the multifamily space in particular. There's a lot of institutional investors out there that are just waiting on the sidelines, waiting for some of these, opportunities where people are feeling the pinch with the delta between what they had, the property under purchase for and what current interest rates are. So many of these investors that have gotten in the multifamily space in particular, as we've talked about in many, many podcasts before this, there was a lot of exuberance in the market. People were just trying to get deals done. They traded at exceptionally favorable cap rates. Many of these loans were either floating rate or had a fixed term, which over time either came due fully or will float. So again, we have yet to see the distress when it comes to multifamily, but most likely it will be coming. And as you can see here, there's several larger entities that are talking about what the implications of that will be and some of the opportunities that will come in the marketplace. They're already starting to see distress in the market for these types of properties. And again, they're trying to capitalize as best their ability. But I saw a statistic just down here a little bit before this that was referencing the total number of money sitting on the sidelines. So it said here that in October, Hodes and Wheel and Associates estimated that closed-end funds pursuing value-add opportunistic strategies was sitting at $300 billion, with about $120 billion allocated to value-add and $116 billion directed toward opportunistic investments. So the money's out there, and there's people out there looking for these types of opportunities.
Yeah, I think, just like a lot of the articles that come out in regards to the bad debt, like I think there are several properties right now and several companies out there that are actually going through major distress. Okay. That means they have floating rate debt and they are not able to make good on their payments. Okay. However, we are seeing that in the very, very intricate submarkets, which is like, give you an example, the office markets of like very large office buildings in high density, high populous areas. Okay. These mega office buildings are having troubles. Okay. You're seeing a lot of those go back to the banks. You're seeing secondary or tertiary hotels. Okay. Big, huge hotels, like major conglomerate hotels in secondary and tertiary markets struggle with these floating rate debts. When it comes to multifamily properties, you're noticing that properties that are struggling right now are, these types of properties where they were bought by syndicators that had absolutely right getting the game, but got into the game because interest rates were 2%. They thought they found a fantastic deal. They're not great operators. They could not turn the deal around, right? Or they haven't turned it around enough to make sense of it. And those deals are going to possibly go back to the bank as well, right? Or the bank's going to try to work with them. So what I'm trying to say, though, is the properties that are being operated by very good operators, okay, that are not like, listen, like fantastic, unbelievable, great product, like here in downtown Miami, okay? That stuff, like these huge multi-family apartment complexes, except for like, the huge ones that have still 20% vacancy that they just developed in the last like 2 years, right? Except for those, a lot of these are not going anywhere. They're not doing anything. Like they're not going anywhere, right? So like you have to be be paying attention to the fact that like when they keep talking about these loans coming due, my 2 cents is that it's not the property, it's not as many properties as we think. And the properties that are going to be going back are properties that deserve to be going back to the bank because they're being they're not performing, right? And that's either from the aspect of the changing landscape of the asset classes when it comes to office buildings, like we just saw in San Francisco, right? Or there was a couple other large office buildings just recently, I believe in Manhattan, that were actually going back to the bank. Huge conglomerate properties owned by Blackstone and other stuff like that. But like, what is Blackstone going to do with a building that's 95% vacant? They're going to give right back to their lender, quote unquote. But for a lot of these, individuals like me and you, Raphael, and all the people watching, it's like, we're not going to be in those rooms of being able to transact on those deals. Like that's not where the money is. The money is, how do you find a mom and pop owner who bought the property a few years ago or refinanced it a few years ago, right? Those few and far in between deals where you see their floating rate debts out there. Those are going to be the slight opportunities you might have to make some money.
Yeah, absolutely. And I think a big part of this article was related to the grand scheme of the multifamily market. And you're 100% right. I'd say the vast majority of these larger multifamily properties may never come to actual market. They're just going to get transacted, between, different owners. I mean, again, if you're a large owner and for some reason you have a troubled asset, you have the information of other owners. Like there's ways for you to be able to get that information. And again, some of this stuff just transacts without even brokers involved. But in a situation like you had mentioned, where you have, the mid-size to slightly larger properties that are owned by either syndicators or mom and pop operators, and they have overextended in some capacity, again, I'd say you have some opportunity in that situation. So. All right. So more next up is Henry's article. And so there's more office building landlords are giving properties back to lenders. So that's kind of the same vein that we just talked about. Yeah.
Exactly. Where is this one located real quick? Scroll this down.
Yeah, sure.
This one was where? Office building. Okay, go back to here. I mean, look at some of this, right? Hold on. Go back. Go up a little real fast. Just read one of the right here. Office buildings made up 43% of all deed in lieu's in the second quarter, the most recent full quarter of CoStar available data that compares 20% average for all in 2022. Guys, 43% of all of the properties in pre-foreclosure are office buildings. That is wild. I mean, holy cow. Right? I mean, plus it's like voluntary surrenders, a larger portion of the day. On the onset of the pandemic, office property deed in lieu made up 21% of all foreclosures before falling 6% in the half of 2022. However, in the second half of this year, the percentage rose to 30%, which was up again in the first half of this year to 33%. This is crazy, guys. Like this is exactly what we're trying to talk about. Like it's not like all of the great properties that we're going to be able to try to sell are going to be, available for us to try to cold call and try to get them on the phone because they're, have floating rate debt. This is if you it was the Virginia, the DC area, right? 650,000 square foot building by Blackstone, right? It's like we're not the everyday consumer going to be, or the everyday broker going to be able to get into these types of these rooms where we're going to have the opportunity to do that. I like these types of things to look at because every person, I mean, I don't even know how many times we've talked about it, but I mean, it's out there so often about this floating, like all this debt that's quote coming due, this maturity stuff. And it's still, again, like we're not taking part in 95% of that.
Yeah, I mean, you look at some of these. Look at this graph. Like the green bars are involuntary foreclosures on office owners. And
Yep.
when you look at the actual line, the deal in lieu percentage, I mean, look at the delta. I mean, it's unbelievable when you look at what it
It's
was
crazy.
the beginning of 2022 versus now into 2023. And I would imagine it's going to continue to have that upward trend into 24 and 25. And you'll probably start seeing, a continued increase in involuntary foreclosures, as well. So, you're right. I mean, there is a doom and gloom as we talked about, if there is any sentiment or ideas about the doom and gloom in the real estate industry, it is office. And I think that's just something that we have to contend with. And that's where a lot of these projects that are being proposed by these municipalities, could potentially help the situation. But in a lot of cases, I think what it comes down to is you're just going to have to redeploy or redevelop these properties or demolish completely and just go ground up and try to make something happen, because, it doesn't bode well for these owners just to stick around and hope that things get better, so
Yeah, I get
that's
that.
what that's what I'm saying. I think that's the only
Yeah.
way we can really address that. But outside of that, one of the articles that I had referenced, again, Globe Street, phenomenal publication. If you guys had a chance to subscribe, I would definitely encourage it. But many bet that the Federal Reserve will cut rates soon. So it's kind of funny. Obviously, there's Deutsche Bank economists had predicted 175 basis point off the current federal funds rate by the end of 24. Wall Street, which I think, which one is this? Oh, Reuters, or LSG, London School of Economics Global, had referenced that they think that it's probably going to be in that 4.8% by the December of 2024. Regardless, the biggest I guess positive is that the sentiment of Wall Street is that by the first quarter of 24, there is a 52% chance, is what they're predicting, that they'll start to unwind their constrictive policy. At least the Fed will, by their May 24 meeting. So again, there's a lot of people on Wall Street and the real estate industry that are pushing for interest rates to drop. So, obviously you kind of take those comments with a grain of salt. But again, I think what it comes down to is that, there is a time in the future where these policies will need to be unwinded, because we don't want to put ourselves in a situation where we have severe job loss in the economy falters, and then we have to kind of course correct like we did, once COVID hit, because, obviously COVID was an unpredicted situation, but you also don't want to get into a situation where you overcorrect and then now have to deal with the consequences. And so, although a lot of these Wall Street analysts and even Bill Ackman, very well respected and prominent private equity CEO in the marketplace, has said that Q1 24 is the time where they want to see rates come down. Jerome Powell has obviously said that they're making progress towards reaching the 2% target rate for inflation, but they think that it's going to be a long way to go before they actually hit that. So I don't know what your thoughts are on it.
Yeah, I think that this is something like, again, we've touched on this a little bit. This is great news. I get more and more excited about all this kind of stuff as you really start understanding like the backside of everything, which is like, listen, yes, interest rates are a lot higher now than they have been in the last period, the last few years that we've experienced, especially for those of you who've only been in the business maybe 2 years, 5 years, is, even 10 or 20 years, because obviously, the interest rates haven't been this high since the 80s. What's interesting though is when you see this type of stuff, this is the time to get excited and double down on the lead gen side, because this means that a lot of the deals that you have in the pipeline, right, are stuff that you've been calling on for quite some time, and that they're going to probably be selling in 2024. We're actually going to be able to possibly come across some decent opportunities. I mean, this is great news. I mean, I'm excited. I love when I see all these people coming together and sharing their thoughts, their opinions on when interest rates are dropping. Guys, imagine if interest rates hit 4.5% by December. Could you imagine of next year? I mean, there's going to be so much opportunity in the water, because now all of a sudden, now you can start doing all those deals that you have at 6 caps, 6.5 caps, 7 cap deals or better. All of a sudden, like, you're taking up all that, like that margin is coming back to the bottom line, where investors are going to be able to make sense of deals again.
Yeah, 100%. And again, I think what it comes down to is that understanding why we're in the situation we are currently. I mean, we're in a situation where we're trying to combat inflation. Inflation in general is terrible for the economy. So, there's a reason why we're having to go through a little bit of pain right now. But at the end of the day, better times are ahead. And I think that there's a lot of wise and smart people that see kind of the tea leaves and say, you know what, we're getting to a point now where the economy is starting to stabilize. The core inflation rate has come down quite a bit. All the restrictive policies are working as intended by the Federal Reserve, so that their policy, they're retroactive looking. They always look back in the past to determine how they're going to make their decisions going forward. So, come Q1, even Q2 of 24, all that positive news is going to impact their decision-making process. And as a result, you're likely going to see them take a different approach to actually following that constrictive policy, which, again, is going to benefit us as people in the commercial real estate profession immensely. So, all right. So next up is the Sun Belt tops the nation with the most apartment units under construction. And I think, it's evidenced by you being in Miami. I'm sure you see this all over. So,
Yeah. I mean, okay. Yeah. Zoom in on this part. This is what I wanted to talk about actually right here. If you can, bring this open. Cool. Yeah. So, I mean, if you look at the first one, number one, thank you very much. Downtown Miami. Look how many freaking apartments are under construction. I mean, that is just freaking nuts to me.
it's almost
don't
double.
get me wrong.
It's like 2/3 of the inventory. Yeah.
Yeah, right. But what's interesting to me is that, like, being in this area now, I mean, I definitely see there's a lot of people coming here, but a lot of people are moving out. Like, there's people who can't afford it because all these developers keep creating more and more product, thinking that they're going to keep getting the prices and like they could now, a year ago or whatever. Like, with twice the inventory, I mean, twice the amount of inventory is going to really compress pricing, which is actually kind of exciting for people who want to come down here. But what's interesting is, like, the other areas, like ones I thought were fascinating to see are places like Tampa, Phoenix. Actually, even in Phoenix, I mean, like, look at the inventory numbers. Inventory numbers. That, I mean, like, the rent growth, no wonder the rent growth is going down. Like, look at Nashville. I mean, like, all these places, like, guys, this is why rent is going down. Like, things like New York, obviously, I think will always go up just because, like, I think it's probably the highest demand area on planet Earth. But there's a lot of these areas where, like, why is there so much development going on when they already have so much inventory? That's why rent growth is going down, right? It just correlates. It's direct correlations here. Look how much freaking products hit in the market. So I just think it's interesting. Like, you really, like, this is why, as a commercial real estate agent, that would it's interesting. Like, how all those investors are just like, they make jokes about it. Realtors who are like, oh, this is going to be a really, really good deal. And they actually have no idea what they're talking about because they didn't underwrite the deal whatsoever. And they just like, oh, it's a development project, so of course it should be a good, they just make up these things. This is why, like, this is the data, right? So it's like, if you investor a deal in downtown Miami to develop, 200 units and buy the dirt for, 300,000 a unit, it just doesn't make sense. It doesn't make sense. Right. So, like, these are just real important things to be paying attention to, depending on where you're located. Pay attention to this type of data, because not every type of development deal for multifamily is going to be a home run. I mean, we have a deal right now, or actually a couple of deals that I've been part of. We're, like, in very, very good locations. Very good locations to develop anywhere between 20 and 150 units, depending on the project that I'm a part of. The deal doesn't even make sense. Even it's sometimes, 35,000 a door approved, right? Or $50,000 a unit approved. I had to put, like, it just depends obviously on the area, but, like, you really have to do your due diligence, because some of these were even in opportunity zones. It's just, like, without really knowing the markets, like, it's really hard to make sense of investing in these types of deals, especially with the interest rates as high as they are. So anyways, just figured I'd break this all up.
Yeah, and I think part of that too is that, you got a lot of outside money coming into these markets too. So not everyone is as astute as to what is happening, the local dynamics in the marketplace. Because again, you come in with dollar signs in your eyes and you're saying, okay, Phoenix is the hot place to be, Miami's the hot place to be, downtown Nashville's the hot place to be. And there's definitely truth to that. I mean, these markets are unbelievably, they're growing unbelievably. I know I can speak to Phoenix. I lived in Phoenix for a long period of time. Downtown, when I lived in downtown Phoenix, when I was there, would be a ghost town after work hours. I mean, it wasn't really a place where people were hanging out and a hip place. But nowadays, like, I was just back there for Thanksgiving. I wasn't able to go downtown, but I went on February, for the Waste Management Open. And again, it was popping, man. Like, it's unbelievable the growth they've experienced just in 10 years since I've left. So, I see the optimism when it comes to these types of projects. But like you said, I mean, I think what it's happening is people were just trying to deploy money because money was so cheap. It's like, if I don't put money to work, it's silly, right? It's like, why would I not try to, secure a project that could potentially, return whatever the amount is at that moment in time? Because again, money was just really cheap. It just is what it is, the byproduct of the environment.
Yeah, this is it's just interesting. You look at the data and you're like, wow, like actually it makes zero sense to develop more product in this market. Now, what's interesting though is that, like, with all that type of people coming into this market, what's really cool to develop is industrial properties or retail properties, right? Because people want to spend money, right? And these people are coming down here and all opening businesses, and ordering more goods. So, the e-commerce business is going to continue booming. The retail stuff is going to keep booming, but just pay attention to, like, the development side is, you might have to adjust your lens in which you look at it.
Definitely. All right. So next up is, a strategy we often talk about. So what Globe Street referenced, economic conditions ideal for a sale and leaseback strategy. So again, as we've talked about, I have to sign in, unfortunately, but really this article kind of referenced the strategy of the sale and leaseback, which again, we've talked about on the show several times. But for those of you guys who don't know, sale and leaseback involves a property owner selling the property and then immediately signing a lease for some specified terms and rent payments, etc., so that it essentially becomes an investment property. And then you could trade it at some form of cap rate. So, for a lot of owner user property, that's what there's a lot of stuff that's transacting in the marketplace. But in something like, for an example, something like this could be a great opportunity for business owners that didn't necessarily think about, moving, but they need some extra capital in their business to be able to deploy and hopefully grow their enterprise. It's a great way to unlock that capital by pitching the sale and leaseback strategy, and then hopefully, positioning the asset as an investment property instead of just a vacant owner user property. So
yeah, and what I found, I love this idea, by the way. Thank you for this article, my friend. This is so awesome because, like, I actually have a number of these types of deals that I'm doing right now, a number of them. And what's fascinating is that when you're talking to somebody who owns the property but is not an investor, they are an owner occupant. They do not think with an investor mindset. So when you quote offer a 10 cap, it's not like they're not savvy in that sense of understanding, like, oh, that may or may not be a good deal. What they care about is like, hey, I paid this and now I'm selling it for this. I make X dollars. They're thrilled with it, right? And sometimes they need a cash injection in their business. Maybe they're looking for, they would need an extra $1 million, $2 million, $5 million in their bank account right now. You don't know. Right? Maybe their business is doing okay, but they've been doing the same business for 20 years. They're open to doing like a 5 or 10 year lease back. And the cool part also is that I found that we can get the best price per square foot deals with leasebacks. So you might be dealing with maybe a little bit less of rent, right? Where you're not going to get a crazy high cap rate, maybe get an 8 cap day one or something like that, not like a 10 or a 15 or something ridiculous, but you get a decent cap rate day one. But what's so juicy about these types of deals is that a lot of the time we're structuring fantastic price per square foots on these deals, which means that once they leave, they vacate, right? You do a 5-year lease or a 10-year lease possibly. In that period of time, all of a sudden now you open it up to, like, we just bought this property when our market's like $200 a foot. We're getting it for $100 a foot or $120 a foot, but we're being very flexible with that on terms. So there could be a massive win-win situation when it comes to leasebacks.
absolutely. Yeah, I couldn't agree more. I mean, there was a a client of mine who purchased a sale and leaseback a little while ago. And again, the marketed terms weren't necessarily the most attractive. I think at the time it was like a 7 cap or whatever. But the market rate once they vacate, and again, they only signed a 5-year lease. And so it's like, it kind of creates that anticipation where it's like, okay, well, maybe I'm not taking a huge chunk of cash flow from day one, but over a 5-year term, once that person leaves, guaranteed you're going to get, in this case, it was like a 40 or 50% bump in rents, which what does that do to your return profile?
Sick.
It's like crazy. Sick. So, again, you got to think about these types of situations because, again, as an advisor, we're talking to agents right now, you are the advisor to people. And oftentimes you kind of have to enlighten them about these types of opportunities, both on the buy side and sell side. So again, I think it's just important to have this discussion and kind of have this as a tool in your tool belt as you start getting out there in the marketplace. So,
yeah. Yeah, and then I guess for the last article here, if you want to bring this one up, just thought it'd be interesting to kind of throw this in.
are you talking? So which one do you want to
The,
pull up? I was
the
going to
last
pull up.
the last one on mine.
Okay, pull it up.
Yeah. So, anyways, I just thought this was interesting news that, like, for those of you who do not know, Charlie Munger actually just passed away. Really crazy to think about how much of an impact this man has made on investing in general. Him and Warren Buffett together. I mean, obviously, the guy was 99 years old. God bless his soul. I mean, still lived an amazingly long life. Accomplished a lot of amazing things. But this just also is a really interesting thing, which is lets you think about investing differently. So just, I know for a lot of you guys who are looking to invest in real estate, I love the philosophy that he has in regards to, quote, um, fishing where the fish are, right? Which
Yeah.
a lot of that has to do with, you sell what you prospect for, people, right? So it's like, if you're not happy with your price point, if you're not happy with the location, you're not happy with any of that, like, you can shift it, you can adapt it, you can change it. But when you have a very long-term approach like him and Warren do in regards to investing or in this business in general, right? Like, I have a 30-year approach on this business, right? I'm 29 now. I'm looking at the next 30 plus years in this industry, and I know that I will accomplish everything I want to accomplish in due time if I just stay incredibly focused, productive, and consistent. So, anyways, just, God rest in peace, my friend.
Yeah. No,
Thought I'd
an
bring this up.
icon. A true icon, man. It's unbelievable. And I don't know if you've had a chance to read some of the stuff that they've talked about. I used to watch. I read a lot of his articles, and he's written a book as well that was phenomenal. I mean, the guy was an icon. And it's cool to be able to kind of see someone who has had so much success, including him and Warren Buffett, and just be so humble and create something of significance that will live on in perpetuity after the fact that they passed away. And I watched an article on CNBC, or I'm sorry, I watched a little section of CNBC where they talked about Charlie's death, and they talk a little bit about the impact that he's had on Berkshire as a whole. And prior to him actually joining Berkshire, obviously the model that Warren Buffett followed was kind of find companies that have just a little bit of life left in them and kind of milk it for all it's worth. He called it like the cigarette butts, right? You'd buy these companies and just smoke the last remaining piece of cigarettes. And Charlie kind of shifted his mindset into saying, look, we should be targeting excellent companies, and we can get them even at a slight discount. Because at the end of the day, those companies are going to be the ones that last the longest. They're the ones who are going to really, amplify our sales over time. Kind of what we talked about just with the sale and leaseback opportunity. Yeah, you may buy a building right now that's a 7 cap, or you may buy a building that doesn't necessarily have the returns you want from day one. But when you start looking at the time horizon, and if it in fact has all the different metrics you're looking for, location, maybe the operating business on site has all these different terms that are eventually going to lead to greater results long term, like that's going to be a much more attractive play than you trying to pick up these small piddly deals and small opportunities that are at great prices, but there's a ceiling, right? You're never going to be able to get the most out of that particular investment. So again, I just thought I'd share that because I thought it was a really insightful thought.
I'm right there with you, man. I think that this type of investment philosophy, both in the stock market world and in real estate, it just holds true, right? You want to buy Class A properties at Class B or Class C prices, right? Like that's what we want. Right? We want the best type of product, the best locations, for the best prices. That's what it's very hard to lose money when you do that. And again, if you haven't read Poor Charlie's Almanac, which is about Charlie Munger's not really his whole life, but a lot of amazing knowledge and wisdom from Charlie, his insights of Charlie Munger. Make sure you check that out. It's Poor Charlie's Almanac. You can get it anywhere. But just a really great book. I got a lot out of it as well. So yeah, I don't know if we have, let's see. For those of you guys who are watching, by the way, you guys can drop any questions you have in the chat box. We're going to be spending 10 or 15 minutes or so on Q&A in any minute now. So I definitely would for you guys to, drop any questions or comments or opinions in the chat. Love to get your 2 cents. And again, thank you guys for tuning in. We appreciate you.
Hey, Christopher, how's it going? He says, great insight, guys. I'll always appreciate the support, my friend. Good to see you on the live stream. All right. I hope I'm saying this right. Padre de la Verde. Thanks.
Love
Hey
the
man,
accent.
really liking the yeah, I tried to it's all one word, so it's kind of hard to really read. So really liking the content. Keep up the good work. Thanks, my friend. I appreciate you tuning in and engaging with the stream. So what do you got
Appreciate that.
working? What do you got working, Henry? Just out of curiosity, I'd love to kind of get your insights on
Yeah.
some of the things you guys work on.
Yeah, so I mean a bunch of little things right now. We're working on a bunch of different plans for self storage facilities. Working on a couple development projects for self storage and for flex space. We're working on a bunch of liquor stores right now and car washes in Jersey. Actually, just came across a number of larger warehouses of very mom and pop esque facilities, which are fantastic. So we're looking at a 150,000 square foot building in South Jersey now. Working on negotiating a couple deals with that. A lot of smaller multifamilies. A lot of mixed bag, man, mixed bag. We're trying to, we're also submitting somewhere between 5 and 15 offers a day on different stuff. So we're trying to see what we can make happen.
That's awesome, man. Yeah, and obviously, if you guys haven't tuned in to Henry's live call stream, I believe you do it every Friday. You can kind of see some of the ways that he approaches the process of reaching out to people and really trying to structure deals on the phone, which obviously is your go-to. So, and also a lot of acceleration on his YouTube channel. I think you're at almost 5,000 subscribers now, right? You're like 4,700 or
Yeah,
something. So you've had
we had
some pretty big.
one short blew up and almost 1,000 subs just from one video.
Dude, that's great.
Kind of
Good
well.
for you. Yeah,
Thanks,
yeah.
man.
I'm pushing 3. I'm almost at 3 right now. So
Love it. Make sure you like, comment, and subscribe if you're not yet already.
absolutely, absolutely. I would appreciate that. And outside of that, I mean, same old on my end. I mean, I've been working a lot of retail stuff. So, it's interesting. I mean, the investment market in the retail side, when you talk about some triple net investment opportunities, things are still trading. So it's kind of interesting to see. We've made plays at a couple. One was a Pizza Hut, which I talked about. We're finalizing a lease deal. I'm finalizing an LOI right now. It's actually hopefully going to be signed today. But we've made plays at other things in the marketplace, and stuff's still trading. So still a pretty active investment landscape. Yep,
100%.
Scott. So Scott's tuning in from North Las Vegas. He says, great comments and content. Thanks, guys. We appreciate you, my friend. I'm sure the weather there is probably nicer than over here. We're pushing zero. We're pushing freezing over here. So
Really, holy cow.
yeah, I know.
Yeah, Miami's not too shabby. I mean, Vegas gives me the heebie-jeebies. I've lost too much money gambling recently.
I can imagine. In Vegas, or are you online?
No, here in Miami at the Hard Rock.
Oh, you go to the Hard Rock, yeah. So we just legalized sports betting in Kentucky. So
Nice.
it's I'm not a huge sports gambler, but everyone was all excited because historically people would have to go across the river to Indiana, and it was funny because they had like GPS locators obviously on your phone, and so if you tried to access the online gaming sites, they wouldn't let you do it until you crossed the river, and then you were able to do what you needed to do. So it was just funny. I've had friends who were like, "Yeah, I'm driving over to Indiana, grabbing a beer, and I'll make some bets." I'm like, so silly,
Yeah, they just sit in the park or something, making bets.
Yeah, they go to the brewery or something and have a couple beers and just make bets while they're watching. So power to you. Power to
63 degrees in Vegas. Oh, that's right. It does get a little cooler these days. Well, listen, guys, we appreciate you guys tuning in. If you guys have any more questions, we're going to stay on for another few minutes. We'd love to be able to support you in your businesses. I'm also, by the way, I'm hosting a business planning goal setting workshop coming up on December 13th, coming to you live 6:30 p.m. Eastern Standard Time. So that's December 13th. It is a Wednesday. So, over the next few Wednesdays, we'll continue reiterating, but Wednesday, December 13th, 6:30 p.m. Eastern Standard Time. We'd love for you guys to tune in. I am going to be live streaming it on my channel. So if you have not yet subscribed, please do so. A lot more content will come, and you guys can also register on the Eventbrite link. You'll see that all over my channel. So love for you guys to tune in. If you guys want to have a really fantastic 2024, like if you want to take 2024 and knock it out of the park, I want to show you the exact path in order to have a success rate of over 80% with your goals, because there is a way to do it and a way not to do it. And I went too many years of not knowing how to do it. So I'm going to be able to share with you my insights to show you how to succeed in not only commercial real estate, but just at any goal you set, right? So it's all about goal setting and in business planning. So I'd love for you guys to tune in again December 13th at 6:30 p.m. Eastern Standard Time.
Absolutely. And obviously, kind of a testament to what you're doing on the coaching side. I mean, accountability is going to be extremely important, I think, in 2024 and beyond, really in life in general. You got to have a close-knit group of people that you can find support in and can hold you accountable because, again, people are imperfect. People don't always do what they need to do. But if you have a group of people that you can surround yourself with, have someone like a Henry or have someone in their coaching program that can actually push you to the next level, it's always a benefit as well. So definitely consider checking those things out. And then, again, just follow the content, man. Keep following.
Yeah. Other than that, guys, again, if there's no more questions, again, if you have also, by the way, if you guys have any type of news article that you guys see, any type of current event you want us to review or deal you want us to underwrite or promote or have on the channel, make sure you send all the details to deals at CREnewshour.com. I'm just flipping over the banner here so you guys can all see it. Again, deals at CREnewshour.com. So if you guys, again, have any article at all, let's just say you guys are reading about some type of development opportunities, investment opportunities, interest rate, whatever's going on in your local market, even, make sure you send it over to deals at CREnewshour.com. And we'll be able to take a look at it, and we'll maybe even have it on the show and try to give you our 2 cents on it.
Absolutely. And also one of the things that we've talked about several times on the show is that we'd like to, get your feedback as to whether or not you would find value in us at some point during the call, doing kind of a live underwriting of potential deals, maybe pulling up something online and kind of pulling in the data and trying to see how we would look at these types of opportunities. So if you guys have, would like us to do something like that, please feel free to type away in the chat box and kind of say, yes, we'd love to see that. And if you guys have a deal in particular that you're just kind of, like Henry said, just scratching your head, you're saying, is this going to be a good opportunity? Again, send it to us. We're happy to review it and underwrite it. If we feel like if you're open to it, we can even review it live so that we can, provide as much value as we can to the marketplace. Again, you can send that at deals@CREnewshour.com. That's deals@CREnewshour.com.
Yeah, and maybe we'll try to bring up a bunch of LoopNet deals or CoStar deals, and we'll just make fun of a lot of them. How like people are trying to list 2 caps or 4 caps, and we'll see what that happens.
Yeah, of course. Yeah, and we'll comment on the description because always the descriptions are always very nice. They're always.
I'm down with that. I'm down with it. I think we could try to sprinkle some of that in over the next few weeks.
For sure. Yeah. And Father, I said, yes, we'd love to see that. So we'll definitely consider doing that here in the coming episodes as well. Again, we're just trying to add as much value as we can to you all. So again, feel free to type away. If you guys have any suggestions, questions, again, feel free to reach out.
Yeah. Other than that, Raphael, as always, thank you for being a fantastic co-host with me. We appreciate it very much. Love making content with you. And again, if you guys have not checked out his channel, please make sure you do so. We come to you live each and every single Wednesday at 3 p.m. Eastern Standard Time to give you all basically the current events and everything commercial real estate. Other than that, Raphael, anything else you want to say before we wrap?
Not at all, man. It's just always good to see you. It's great to see everyone on the live stream, and we're looking forward to continue to see you moving forward.
That's it. All right. Take care, everybody.
See ya.